Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. And this morning, what I'd like to do is take a look at the equity markets. Equity markets are still looking for a bottom. They're still in a correction. But we did see some pretty interesting action last week. Namely, we saw a huge reversal last Wednesday when actually the S&P undercut that 1867 low from August of this year, August 2015, and then it actually intraday even undercut the October 2014 low of about 1820. We went down to 1812, and all this reversed on higher volume and didn't close positive for the day, but did close for the upper half of the day. Pretty much we saw the same thing on the NASDAQ. The NASDAQ did not undercut the August 2015 lows, but it did come pretty much near there and bounce with this. And of course, we had a pretty good rally on Thursday and Friday. Everything was there except for, of course, the volume, which is a troubling sign. But on the positive news is that we did get this reversal. And also we did see the transport participating in this bounce, as we did see the small caps. And those two groups were that were diverging away from the general market, acting much worse. So there might be some hope that possibly the market may be putting in a low. Too early to tell. So the things that we're going to look for is what's called follow-through day, meaning sometime this week we're looking to see if the market can stage a big rally, maybe about 1.3% up on greater volume than the day before. And that may tell us that maybe institutions are indeed stepping up, buying equities hands over fists. We haven't seen that. We've seen a positive bounce, but not much follow-through on that. Now, if you like candlestick charting, and if you look at last week's action, pretty much ended with a very bullish so-called hammer. Again, that's a positive sign, meaning the market closed up positive for the week after having a long tail, being way down low. So, also some of the positive things going on is the sentiment is extremely negative. If we look at the AAII, that's the American Association of Individual Investors, their sentiment surveys are pretty much near lows. We hit 17% last week of bulls. That's the kind of thing you see near bear market bottoms. We're not really in a bear market, depends how you want to call it. We are in a pretty deep correction. So that tells you sentiment's pretty bad. That's a contrarian indicator. Sentiment might be pretty good. That might be what we need to start doing a little bit better. Also, to put the call ratio over the last 2 weeks is spiking very many times above 1. We got up to a 1.5 one day there. So again, keep your eye on those kind of things. Those are the kind of things that may make markets turn. So, in summary, what we're looking for here is the so-called follow-through day. See if we can get the confirmation of last week's bounce. It's too early to tell. A lot of technical damage in the market. Very few stocks acting well or moving into new highs. Last week we did see Intuitive Surgical, that symbol is ISRG, try to break into new highs, backing off. It's still at that pivot point. That's something you might want to keep your eye on. Other than that, keep looking for that follow-through day, confirmation of a rally. Otherwise, we still may be moving sideways here, correcting for a while. So as always, let price and volume be your guide. This is George Kachuk, RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading day.